Well, greetings, my beloved clients and friends. It's been a while since we did a video. The last 9 months or so, the market's been pretty calm, just kind of working its way up. No big excitement, and things were going good. And then all of a sudden, end of July, it started getting exciting. We started seeing some movement, especially in the last week. We saw some big volatility, and so I thought it's time to get out on the trail and have a chat, let you guys know what we see going on. So last week, the Fed had their meeting. They have a meeting every 6 weeks or so, 5 or 6 weeks, and they had one in July, and it was widely anticipated that they were going to keep rates steady, which they did, but they gave a strong indication that they were ready to start bringing rates down, probably at their next September meeting. So they started seeing signs that maybe it's better to ease rates rather than hold them where they are, or worse yet, raise rates further. Okay, so that was on Wednesday. Market was happy to hear that he's ready to start lowering rates. And then on Friday, the jobs report came out, which measures unemployment. And unemployment popped up to 4.3% on an annual basis. It had been 4% the month before, and it had been 3.9% the month before that. So that unemployment number had been kind of trickling up. It had bottomed out at 3.4% in April of 2023, and which is a little bit over a year ago. And from that point, it was kind of coming up, coming down, coming up, working its way up above 3.4, but under 4. Okay, but it was kind of trending. General trend was up a little bit, but it wouldn't go consistently month up. But in the last 4 months, it did 3.7, 3.8, 3.94, and then most recently 4.3. So that's enough to kind of indicate a pattern, and especially a big jump to 4.3. And so, above 4, that was kind of a sign, and then up to 4.3 the next month. Then the Monday morning quarterbacks showed up on Friday, and they said Powell should have cut rates. He waited too long. Now keep in mind, nobody said that on Wednesday, right? And they had the same information that Powell had. Powell did not know what the unemployment number was going to be on Friday, and nobody was complaining about what he did or said on Wednesday. Actually, they were kind of happy about it. And then on Friday, everybody started throwing rocks. Oh, he should have cut rates. And probably he should have. If the dates of those two meetings were switched, if the unemployment number came out Wednesday and his meeting was Friday, he probably would have cut rates, right? But it wasn't. He made his statement on Wednesday, and the unemployment number came out on Friday. So he didn't have that information, and he didn't lower rates. But nevertheless, the market is upset that he didn't, and he probably should have in hindsight. So now he has, the next meeting's not until September. So there's nothing stopping him from lowering rates prior to the next meeting. It's kind of a bold move. But he could do it, and the market would be very relieved if he did. But I'm not sure if he's going to do it or not. He might. And here's one thing that was probably holding him back in July and could hold him back between now and September, is if he would have lowered rates on Wednesday, there would have been some people that would say, oh, he lowered rates to influence the election, to give the Democrats some steam. to help them out, right? Because the Fed chair gets accused of that, and we're in an election year, and they say, oh yeah, they usually lower rates going into election to help the incumbent. So he has that pressure, and he doesn't want to influence the election, or being accused of it. So I could see why he didn't do it in July, even though unemployment was already kind of showing that it was going up. Okay, so that's just one point. So, but nevertheless, it's creating volatility in the market because the market's now realizing we need a rate cut, and we need it quickly, and maybe September is not quick enough, right? That's probably true. Now, let's talk about this 4.3% unemployment, which is up from the low of a year ago of 3.4. But let's just put it in context, okay? An unemployment rate of 3.4 is very low. It was historically low. It was an all-time low, and Biden was giving himself credit, saying that unemployment, I brought unemployment to the lowest level it's ever been, or one of the lowest levels that ever been, which was true. But that was, 2 years into his presidency, and since then, unemployment's gotten worse. So I don't think he should take the victory lap over that. But going back to 3.4% unemployment, is that great? Is it great that unemployment is the lowest it's ever been? I would say no. And I would say no because of this. When unemployment is that low, 3% unemployment, it creates a strain on employers. It's a very tight labor market, and employers can't find workers. It's too tight. And in order to get workers, they have to offer higher and higher wages, right? So it's inflationary. 3.4 unemployment is too tight. It's not healthy, right? So it's good for it to probably come up a little bit. And Powell was trying to raise rates to bring unemployment up a little bit to take some of the pressure off of inflation, right? But it could go the other way. It could get too loose, right? But I think in the fours, low fours is healthy. The problem is if it keeps going up, that's the problem. So it's not that 4% unemployment is bad, or that 4.3 unemployment is bad, but the direction that it's going could get bad, right? So that's the deal with unemployment going up to 4.3%. It's indicating that maybe this soft landing won't be so soft. We wanted it to come up a little bit, and we were glad that it came off at 3.4 up to 3.5, 6, 7, 8, 9. Once it gets up to 4, we're like, okay, it better start leveling off. And it really didn't level off. It went up quite a bit to 4.3. So that was the concern, that maybe the economy is slowing down. They wanted to slow down just enough to get inflation under control, but not too much that we dropped into a recession. So it's a real delicate balance. And they're like, maybe he waited a little bit too long to lower rates in hindsight, right? If he would have known what that unemployment number would have been on Friday, he probably would have done it. So, you can't blame him, but people are blaming him, right? And they're saying he waited too long. The market's not happy. They're worried that September might not come soon enough. So, and then again, if he makes a drastic move, he might be accused of helping the Democrats. So I think what we should do is let him lower rates and then keep our mouths shut and not point fingers at him and say, oh, he did that to help the Democrats. That would be the best case scenario. So until, the fact is that he's probably, almost 100% sure that he's going to lower rates in September. He might even lower them 50 basis points, because 25 basis points is the standard, 0.25%. He might even lower it 50. Yeah. And the market might not be super happy with just a quarter, right? But I think when he starts lowering rates, the market's going to get happy again. But until then, through August, if this data keeps indicating weakness and Powell doesn't make a move, we could see some volatility in the market. But let's not say that 4.3% unemployment is the economy at a standstill, or the economy in a toilet. It's 4.3 is not bad. We want to be concerned if it keeps going in that direction, up towards 4.5 and 5. And by the way, when I was in college and we talked about unemployment, I was taught that 5% equaled full employment. 5% unemployment equaled full employment. That's a healthy, fully employed labor market, that employers could find workers and workers could find jobs for the most part, right? If it gets too tight, then workers can't find, if it gets too tight, employers can't find workers, that's not good. If it gets too loose, then workers can't find jobs, and that's not good. But that 4 to 5%, that's not a bad place to be. Just the direction is what they're worried about. That it kind of moved kind of fast from 4 to 4.3. So I believe that he needs to start lowering rates. If he does it before September, that'd be great. It'd be a very welcome reprieve for the market. But so I guess the concern is that the economy might be slowing down. And prior to last week, there was some couple other interesting things to point out. One was it's an election year, and a lot has changed in the last month, right? In June there was that presidential debate when it was like, wow, Biden, they got to do something about Biden, and it looks like Trump's going to cruise in. And then the guy got shot, and then he's for sure going to win, right? And so the market kind of was pricing in a likelihood of a Trump victory, and it was something that probably the market would prefer. I think for the economics and the business environment, he'd be the preferred choice. But then the Democrats did replace Biden with Harris, and she got this huge tailwind. And so then it looked like the race tightened up quite a bit. So that lent to the volatility in the market. There's two wars going on. That's kind of leading to volatility in the market. I'm talking about Ukraine and Israel. And the other thing that we saw on July 11th, it seemed like there was a big shift in the market, because prior to July 11th, I said the last 9 months had been pretty good for the market. But more specifically, the last 9 months had been really good for chips and what they call the Magnificent Seven. 7 mega cap tech stocks that are leading the way in AI. And those would be Microsoft, Facebook, Amazon, Apple, Google, Tesla, and Nvidia, right? Those 7 were kind of leading the way. And then a handful of chip companies also. The chips were just ripping, right? But outside of that, the market was pretty much flat. They were saying, the S&P 500 is up, but it's only those 7 that are up. The S&P 493 was basically flat. So it wasn't broad. The breadth of the market rally was very narrow. It wasn't a broad rally. So that was a little bit unsettling. And so like on June 11th, it seemed like profits started coming out of those Magnificent Seven and those chips winners, and they started looking for other companies, other non-tech companies that had been left behind, some good ones that they started looking for value again. It was like a shift from AI and chips to value. So it didn't move the market that much because it was movement within the market, right? So the 7 were down and those other 493 were coming up. So if you look on it on a day basis, you don't really see big movement, but there was big movement. Okay, and that started happening on July 11th. So in our portfolio, we have exposure to both the 7 and the 493. So we didn't see a lot of movement, but we did see the shift. And then, you know, in the most recent week, we saw selling, and another thing we saw was interest rates. Prior to last week, I was buying a lot of short-term treasuries, 4 to 6 months, maybe 7 months at the most, and I was getting about 5.3%. Well, that's gone. As of last Friday, that is gone. There's no more 5% bonds, because what's pricing in is that the Fed is going to lower rates, right? The best we can get is like 4.9, 4.75 is in that range. So, I mean, the market is strongly pricing in 2 to 3 rate cuts before the end of the year. So all those things are short-term phenomena that we're not too worried about. We could navigate through this. It's just going to be a little bit volatile until we start getting the rate cuts. So it's not pleasant, but it's not like these companies are going out of business. It's not, I don't think it's the end of the world. So, I mean, we're making some changes on the margins, but it's not like we're throwing everything overboard, because it's not that type of event, I believe. So I just wanted to give you an update on what's happening and why it's happening and what we're doing in response to it. And if you have any questions, call the office or send me an email. But yeah, we're doing our best to stay on top of it and not overreact and also not underreact. Okay, so hope that helps, and hope you guys have a wonderful day.